talk about this relationship, Diego, between the United States and Mexico. It is that border goes both ways right now, and if you shut it down, it'll shut down both ways.
That's the expectations. Any unilateral measure can create that type of effect. Mexico is the third largest trading partner, $500 billion. So people are talking about the 60 billion, but they're forgetting the fact that the U.S., there are 6 million jobs, U.S. jobs, exporting things to Mexico.
Diego, there's a million news outlets, economists and researchers who just spent the last 12 hours working out what a 20% tariff actually meant. I wonder as an investor whether you just ignored all of that nonsense and just went out and bought a load of pesos yesterday when we got another sell-off.
Yes, I did. But we think that the peso is cheap, and obviously given the devaluation of Mexico, that is the Mexican peso, that has been conspicuous within emerging markets, you would argue that any regular tariff would be more than absorbed already by current prices.
Meaning that? Meaning
that Mexico should be fine. You know, what the market seems to be predicting seems to be, I don't know what kind of worst case, maybe that not only the tariff is imposed, but then you have the worst possible outcome out of the election in Mexico next year.
So Elsa, is that what the currency market is telling you too, or is it that you need to see reality and actual steps for the peso to take another leg lower?
So what we're looking for at the moment is we've got a fair value range of 21 to 21.60, given everything we've seen so far. And it's not just a Mexican peso story. We've also got a reasonably constructive view on the US dollar. But we do see potential to break to new highs in dollar mex, just purely on the fact that there still is a lot of headline risk, and you could see a much more aggressive tone from both sides of the border. And, you know, like you said at the start of the segment, this is a very important trade relation to both sides of the border, but it's not clear that the administration acknowledges that at the moment.
Well, so many things are not clear right now, Diego, and one of them is exactly how much is real, as we've been talking about. Is this actually, in some ways, working to President Trump's advantage? In this sense, if the markets are not overreacting, he doesn't have to worry as much about that. He can continue with his negotiation sort of stance. He's throwing a lot of things out the way you might in a negotiation rather than in really acting as President of the United States.
Yeah, but I think in international relationships, these negotiations are slightly different because it's not that you have only one set of things to negotiate. You know, why would you single out Mexico? At the end of the day, you have $500 billion of trade, similar trade situation with Canada and China. You have bigger trade deficits with Japan and Germany. So why Mexico? Just because you want to pay for the wall? It doesn't add up. So the question is, I think that at the end of the day, it makes sense from a politics standpoint. It might make sense, the rhetoric, but at some point in time, you have to have a coherent international trading policy.
Diego, I'm trying to understand how you can be an investor in this environment and be successful. And one of the examples was the election, that if you ignored the personality and the sound bites and focused on what was actually going to be policy, you made money. And this time around, if you ignore the sound bites and the theatre of Spicer coming out with a random line and just put that to one side, you can take opportunity of some of these events. And you did. You bought pesos yesterday, and now the peso's stronger on the day. I just want to understand from you, if we get more of these dislocations in the market and you're looking at Mexico, what assets are you looking at beyond the currency itself?
Well, in general, in this case, we think that local bonds in pesos, it might be the best near-term opportunity because I think that that is the sector that has been affected the most. And one of the things that we have noticed is that despite the bad headlines, the peso has not weakened further. So it feels that the positions are already very bearish. So it's not that you cannot get worse, but we think that most of the bad outcome has been already priced in.